Rich Messina, according to E-Trade's latest StreetWise survey, most investors use a mix of actively managed funds as well as index funds. So what's the advantage of that? Why not be in one camp or the other?
It's really not an either-or situation. I think you have to look at, as you're managing your portfolio, there are certain asset classes where passive management, like large cap, makes the most sense. Where there's other asset classes in, say, international or fixed income, where again, an active management will add that alpha. So as you combine the two, it's a more effective portfolio management tool to have.
And this survey also found that dividend ETFs are very popular now, kind of makes sense in this low yield world, but especially among boomers. Can you talk about how they're selecting the proper dividend ETFs for their portfolio? Because there's a lot out there now.
I think a lot of the boomers start to look at, as they're screening through the tools that are available to them, they're looking for the ones that are constructed on the dividend paying. So the index is based on that, right? The companies are under there have consistently paid dividends. That index is constructed, and that's really where they're gravitating towards. The other ones, say in other spaces where that doesn't occur, they're really kind of not moving to it, or the yields are really not high enough to kind of match the other securities that they have.
Meanwhile, millennials, according to the survey, they like bond and commodity ETFs. So what appeals to the millennial generation about those two areas of the market?
They're a lot less risk adverse, right? So you've not watched those two markets kind of bottom out, especially in the fixed income space, high yield. So I think they're looking for the opportunity. They're going to put a portion of their portfolio in it, kind of got that, you've kind of trended towards the bottom, now you're looking for the upward curve. They're willing to take that more risk into their portfolios.
All right, and what kind of effect are all these smart beta products having on the market? Are the millennials getting involved with them, the boomers? Who likes them?
I think they both do, really. I think, again, if you're looking for an active management component in the ETF space, you're able to get that. I wouldn't put my full portfolio into it, but again, at certain aspects of it that I want to kind of have that additional return above and beyond the index, I would use those as again, part of it.
And how are brokers advising their clients to put all these ETFs together in a portfolio? It seems like there's less stock pickers out there. People are using the ETFs. So what are the brokers telling their clients?
The brokers are really, again, doing more of kind of an approach to asset allocation. So they look across, they talk to their clients, they usually put them through a risk tolerance questionnaire to be able to say, this is where I should be. And then again, they're placing, and you see, again, from the active passive component, they're using ETFs in some, they're using mutual funds, or they're combining them together in a more hybrid approach. Even for us here at E-Trade, we've recently launched our adaptive portfolio. It's more of, again, from an online perspective, but it has that hybrid approach, the active and passive mix, which will help clients, like I said, going forward. Very low cost, very easy to work with, but we also have the component of using a financial consultant if you're interested.
All right, well, thanks a lot, Rich.
Thank you.
And thank you for watching The Street.